Hello everyone, and welcome to this presentation of the three main components of a successful strategy. Welcome, my name is Primo. I am the president and founder of Specialist Trading, and if you're unfamiliar with my website, we are first and foremost an educational company. We take all the tips, strategies, and techniques that I've accumulated in my 38 years of trading, and we teach and mentor our students so that they can ultimately empower themselves and make their own trading decisions. Because it's our philosophy that the reason why most traders fail, estimated upwards of 80%, is because you're relying on an outside source to tell you what to do, to tell you what market to trade, when to trade, which time to trade, and things such of that nature. We feel that you should be making your own decisions. That's the only way you're going to be getting onto that road for consistency. And the reason why most traders don't do that is because they don't have the valuable and proper information and education. So we provide you with all of our education. Now, as I stated, I've been trading for 38 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist did or does, there's only a few of them left actually in New York. If you ever look at the old pictures of the people on the trading floor with all the paper on the floor and people yelling and screaming and making these weird hand signals, the specialists were those gentlemen behind the large booths that made markets in upwards of 50 stocks. So that's what I did. I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. So I've traded just about every market environment imaginable, from quiet markets to crazy markets to sideways markets. I've traded just about every strategy or system around, so I know what works in terms of consistency and I know what doesn't. So what I do at Specialist Trading is I just teach and mentor all of my students the same techniques that I currently use in my own trading. So I teamed up with Pro Trader Strategies, our sister site, roughly around 7 years ago and started Specialist Trading, where all we do is teach and mentor our members. Now today I'm going to give you 3 valuable components that we apply to just about 70 to 80% of all the strategies that we have at Specialist Trading. Now, I'm actually going to give you a couple of the rules to one of our most consistent strategies around. Now, you can apply these components I'm going to be sharing with you either to your own current strategy, and I really feel it'll increase your level of success, or you can build a strategy based off of these. So they're really consistent. They work well with all markets, all time frames, in all directions. So I'm going to teach you these and reveal exactly what they are in just a few moments, but we're required first to show you this. So please take a moment to view our disclaimer. I'm going to show you some performance results using these 3 components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So once again, we are required to show you this, and as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. You may want to write down our handle right there. That's at SPCLST. TRADG, abbreviation obviously for Specialist Trading. I post daily information anywhere from signals that our strategies have currently generated. In fact, I posted a strategy for our Forex markets and also for a stock signal that was generated by our strategies the last few days. So a lot of great free information. Follow us on Twitter for some brief information, although not very detailed. If you're looking for more detailed information, you can go to our Facebook page under ProTraderStrategies.com, our sister site, and they put together a more detailed, informative way of seeing what we teach and what we believe in and how our strategies and what they are. So a lot more information, a lot of ways to follow us, and a lot of ways to find out exactly what we do. Now, as I stated at the beginning of the presentation, we are first and foremost an educational company. We're not just a signal service company where we just want to blindly spit out signals. It really goes against our philosophy and our belief. We don't believe in that. That, once again, is a recipe for disaster because we feel that most traders use that as a crutch and they really basically take themselves out of the game. So I'm going to share with you these 3 components and show you how you can apply them to your own trading, and hopefully you'll become a part of the process in the future and get onto that road to consistency. Now, as you see here, my goal is to teach you, not to trade for you, not to tell you when to sell, when to buy, or what to buy or sell. My goal is to simply teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around. Now I'm going to share with you what you're going to be learning today, what I'll be teaching you. But before I do that, I just want to make just a quick announcement. I know a lot of webinars and presentations you've gone to in the past, they like to take questions while the webinar is in place. I'm a little bit different. I like to wait till the very end. So if you have a question, kindly just remember it, and we'll get to it at the very end of the presentation. I have to open up the question and answer box, and I won't even open that up till the end, so I won't be able to see a question if you happen to write it down. The only question I will answer at this point is the most popular and common one, and is this being recorded? Yes, it is. We record all of our presentations, so if you're having technical difficulties or you had to leave early, don't worry, you can contact Pro Trader Strategies and they'll send you a link to this presentation. So once again, if you have a question, kindly wait till the very end of the class. It'll be in about 20 minutes from now. So here's what I'm going to teach you. Here's what you'll be learning today. I'm going to share with you the first component, which is a really simple but powerful technique for trading in sync with the market, regardless of whatever market you decide to trade. Then component number 2 is a price bar pattern. This is a specific price bar pattern you should be looking for in any strategy. And then lastly, I'm going to show you an entry technique. This is a way to fine-tune your entries. Okay, so let's begin. Let's start with component number 1. And obviously component number 1 is you must trade in sync with the trend. Everyone knows this. This is trading 101. We've all been taught to trade in sync with the trend. But if everyone knows this, why do, once again, upwards of 80% of all traders fail? It's my opinion that the reason is because most people have a different idea of what the trend is. I know some educators say that the only way you can find out what the trend is by looking at the higher time frame and making sure it's in sync with the lower time frame. A lot of people use that technique. Other traders say, well, no, you have to look at a specific indicator, some very high convoluted indicator that has been designed that will tell you what the trend is. Still, other people will look at patterns within the chart to tell you what the trend is. Higher highs, higher lows, and vice versa. Okay? They're all okay. They're all valid ways to discern what the trend is. But here is what I feel is the simplest and the most powerful way for determining what the trend is. Let's look at this generic chart, and I specifically didn't put a market on here or the time frame because I want you to know that this applies to any market, any time frame, regardless if this were a 5-minute chart, a tick chart, or a monthly chart. Does not matter. So someone looking at this in hindsight would say, well, Steve, there is no trend here. We're basically just in a range market. We're going down, going back up, and then going back down again. So I've always been taught to stay away from range markets. This is where you get whipsawed. So there's no trend here, okay? That's the way most people would see this chart. That's not true according to what we follow. The easiest and most powerful way to follow and to find out what the trend is to simply add the 50-period moving average, regardless of the time frame, all right? So if this was a 5-minute chart, you would apply a 50-period moving average of the 5-minute chart. If this were a monthly chart, you do the same with monthly bars, okay? That's all you do. You don't have to look at daily bar and discern what the 50-period moving average is. And then you ask yourselves, where is price in relation to the 50? If the majority of price is above the 50, well, then the trend is up. And we're only going to be buyers because we only buy if we are in an uptrend. Okay, do you see it's that simple? Now, conversely, let's look at this chart here. Same generic chart, another chart I should say, but it's same generic feel here. Once again, someone would say, no trend here, Steve. We're just going sideways. I'm not going to do anything. It's not true. At specialist trading, we always add the 50-period moving average regardless of the time frame or market. This could be a currency pair, it could be a stock, it could be a future, it doesn't matter. And then we ask ourselves, where is price in relation to that? Price is below. So if price is below, are we going to buy anything? No, we're only going to be sellers. All right, so I don't care who says what in a chat room or what signals are generated. If you get a buy signal and it's below the 50-period, don't take it, because over time you will generate nothing but losers. Remember, we're all about consistency. We're not going to say that it doesn't work every once in a while, but over time, if you're buying below the 50-period moving average, you most likely will have more losers than winners, and vice versa. So that's component number 1. Simple, but go back and do some research. You'll see how powerful it is. How about component number 2? Look for a bar that closes in the top 25% of its range, okay? So what does this mean? Well, if we are above the 50-period moving average, we want to get clues from the market telling us that most likely it's going to take off in that upward direction very soon. So how do we get this clue? Well, we look for a bar that closes in the top 25% of its range. So a lot of people always get confused with this. They go, what do you mean by the top 25% of its range? Well, let's just take this bar, for example. You take the extreme top, in this case, it could be the high wick, and then the bottom of the low wick. All right, so that's the range. The range is not from open to close. I don't know, a lot of people for some reason think that's the range. That's just the open to close range. But the true range is the extreme high, the extreme low, and you simply divide it by 4. All right? If you close in the top 1/4%, well, that's the top 25%. So we closed here. In actuality, we closed in 3 bars. So these bars all close in the top 25% of their range. Now, conversely, if we are below the 50-period moving average, we want to look for a bar that closes in the bottom 25% of its range. So we use the same concept. You look at this bar here, we measure from top to bottom, and we just want to see that we close in the bottom 1/4. So this bar qualifies. Remember, this is the market giving us a clue that most likely it's getting ready to take off in the direction it is based on the 50-period moving average. Now, once we have these two things in place, we look for some type of way to fine-tune our entries. And therefore, we're going to enter upon the confirmation of trend. So what exactly does that mean? I thought we already found the trend with the 50-period moving average. Well, this is our confirmation method. And all it means is that if we are above the 50-period moving average, we're going to buy on the next bar only. If price trades 1 to 5 ticks, it's up to you, above the bar that closed in the top 25% of its range. Let me show you what that means. A lot easier, maybe a little wordy here, but a lot easier to understand by looking at the chart. So these are the bars in green that close in the top 25%. This means we're going to buy right here, 1 to 5 ticks above, if we trade there on the very next bar. But remember, we cannot do it if it doesn't happen on the next bar. It has to happen on the next bar because that way we'll be capturing momentum. So if it doesn't happen on the next bar, we're not going to buy anything. You see, if we use just a standard format of purchasing where we just buy on the close, look what would have happened on the next bar. It would have gone down lower and lower. You probably would have gotten frightened and sold your position, and then the next day it goes right back up again. So what we want to do is wait for confirmation that it trades, not closes, but trades 1 to 5 ticks above. All right, so it didn't do it here. Now we look at the next example, and here it did. You see there, it traded. This is where students have trouble. They say, well, Steve, it didn't close there. It does not have to close. All it has to do is just trade there, intrabar, and as you can see, it closed lower. But this is an entry point, and look what happened in the next 5 bars. It didn't go up a lot, but it was telling you it's most likely going higher. And we have one last example here. Same thing, closing the top 25% of its range. We are above the 50-period moving average. So we want to buy if we trade here, but on the next bar only. So let's see what happened on the next bar. Well, once again, we traded there. We did not close there. In fact, we closed lower once again, but we're in the trade because the market, not someone on TV or not someone in the chat room, but the market is telling us we're most likely going to be going higher in the next 3 to 5 bars. You may want to jump on board. So taking our cue from the market only, we purchase it, and this time we have a nice gain. See how easy this is when you only listen to the thing you should be listening to, which is the market, not an outside source. How about this example when we're selling? Remember, if we're below the 50, well, now we're going to sell, but on the next bar, if price trades 1 to 5 ticks below the bar that closed in the bottom 1/4 of its range. So if we see these examples right here to the downside below the 50-period moving average, here is our bar that closed in the bottom 25% of its range. So we just don't want to sell at the market. We have to wait for confirmation that it trades right here or just intrabar on the very next bar, and that's our entry. So you can place a stop sell in there. You can just sell at the market once it trades 1 or 3 ticks below. It's up to you. And as you can see, once again, we traded there and closed higher. But we are not concerned with the close. We're only interested in if we trade there. That's our signal from the market telling us we're most likely going lower. So we enter to sell, to go short, and look what happens. You see how simple it is to be in sync with the market when you use these 3 components. The reason why most people fail is they're overcomplicating their trading and they're relying on someone or something else to tell them what to do. If you learn how to listen to the market, you can make your own trading decisions. And once again, our philosophy is that's how you get on that road to consistency, by making your own trading decisions, not by relying on someone to tell you what to do. So these are the three components that make up probably one of our best strategies. That's strategy number 4. And by best, I mean most consistent. Sure, it does, have small winners every once in a while, but it's tremendously consistent in that it's resilient enough to bounce back after it has a small loss. So many times, if you have a small loss, you'll make it back within the next 1 or 2 trades. This is strategy number 4, and I just gave you over half of the rules. I believe there's 5 rules in the strategy. I just gave you 3 of them. Okay? Can't give you away, all of them. That wouldn't be fair to the people that paid good money for this strategy, but I just gave you more than half of them. So let's look at some strategy number 4 examples, and I'll show you just exactly how these 3 components were incorporated in all of these setups. All right, let's start out with stocks for all you stock traders. Here's PNW. Okay, the first thing we ask ourselves is, where is price in relation to the 50 period? Price is above. Okay, so this means we're only going to be buyers, right? If it were below the 50, we would not even be considering buying. We would be looking to sell. But since we're above the 50, now we're looking for that bar that closed in the top quarter of its range, and that's this one right here, circled in blue. But we still can't buy it yet. We have to wait to buy 1 or 2 ticks above. And as well, our automatic software generated a buy signal, right? This according to the 2 remaining rules that are in the strategy that I can't divulge at this time. But still, the strategy calls for you, if you want to trade the standard format, to wait for it to trade above on the next bar. If you're an aggressive trader, we give you the discretion to go ahead and purchase it, but you should be trading for a while to have a fairly good insight into the way strategy number 4 works before you trade that aggressively. More conservative traders wait for price to trade 1 to 5 ticks above, and there it did. It traded above on the next bar, so you would have entered roughly around 61.5, and look what happened to the stock in the next week. It went up to 65. How about GRMN? Okay, first thing we ask ourselves is, where is the majority of price in relation to the 50 period moving average? Price is below, except for this brief little spurt we had above, it is below. And there were no setups here that met our requirements, so we're only looking for sell setups, and here's a bar that closes in its bottom 25%. So that's component number 2. Now, the remaining rules of the strategy were met, so our software automatically generated a sell signal. But if you're trading the standard format, we're not going to just sell yet. We have to wait for price to trade right below here, and it has to trade on the next bar. So let's see what happened. As you can see, it did actually trade on the next bar, kind of a gap down, but you would have been short roughly around the 42 level, 41.5, and what happened in the next month? Went all the way down to 36. So that's a good 4 or 5 points in a month or so. Remember, we're not looking at earnings. We're not looking at news announcements. We're not looking at jobless claims. We don't care about that stuff. Don't let anything determine on what you're going to do. Listen to the market, and your trading will become a lot easier, a lot simpler, and you'll be much more consistent. How about ATVI? Well, we are above the 50 period moving average, and here's a bar that closes in its top 25%. Now, I know a lot of you would say, well, Steve, this bar closed in the top 25%. So did this one. Okay, why weren't those buy setups? Well, remember, I can't give you all the other rules. There are 2 more rules that have to be met, and they were not met according to strategy number 4. But guess what? The software automatically generated a buy signal here. So this was a buy signal, and we would enter on the next day, which we did roughly around 26. Now, nothing really seemed to happen for the next 3 or 4 days. We didn't get stopped out, but it was just to show you many times how it may take a little bit longer than 2 or 3 bars to get the momentum going. But provided that you're not stopped out, you remain in the trade, and oftentimes this will happen. Now, obviously, there was some news that came out and that made the stock gap up a couple of points. We didn't know anything about it. No one called us up from the company. The CEO didn't call me up and say, Steve, be sure and generate a buy signal in the stock, ATVI, because we're going to make an announcement, and it's going to gap up around 3 points. No one told us that. The only thing we listened to was the market. And the market was telling us, because it's above the 50, because the bar closed in the top quarter of its range, and also because of the other rules in the strategy, that most likely we're going higher. And it did. Here's another example to the downside, XL and X. Now, we are, for all intents and purposes, below the 50-period moving average. We have the bar here circled in red that closes in the bottom 25% of its range, and at the same time, it met all of the rules of strategy number 4. So the software automatically generates a sell signal. But we can't just go short yet. If we're trading the standard format, we have to wait for it to trade below on the next bar only. So we wait to see, and yes, we went short, roughly around 42.5, and the stock goes down to 38.5 in the next week. So you see, this works in upside movement as well as downside movement. Now let's show you how it can work on the E-mini S&P. Let's go to an entirely different market, entirely different time frames, and we'll show you how well it works. Here's the 50-period moving average in green, and where is price in relation to that on this 60-minute chart? Price is below. So are we going to be buying the E-mini on this hourly time frame? Not at all. Remember, it may work every once in a while, but over time, it's like the slot machines. You know, it'll give you this false sense of security thinking that you're doing well, but over time, you really have nothing to show for it. So the main thing is you want to be consistent. So consistency lies in being in sync with the 50-period moving average. So if price is below the way it is here, even if we're looking at an intraday chart, we only want to be short. So here's a bar circled in red that closes in the bottom quarter of its range. At the same time, it meets all the rules of strategy number 4, so the software generates a sell signal. Now, once again, these are the same rules whether we're looking at stocks or futures. But we still can't go short if we're trading the standard format. We have to wait for it to trade 1 or 2 ticks below that bar, and it has to be on the next bar. So as we can see on the very next bar, we got short. So we're short in the trade, and look what happens over the next 2 days. Okay, this was in August when the market fell out of bed. If we recall, the market just was literally down 1,000 points at one day, and all of this was signaled in advance by asking ourselves where price was in relation to the 50-period moving average. You see how this will work in your favor. The only people that would have lost in this trade were people trying to look for a bottom and trying to buy. And I'm sure there were a lot of people that tried to buy in these last 2 days. Once again, if you just follow the simple rule of 50-period moving average and listen to the market, you'll have a lot more consistency in your trading, regardless of what strategy you trade. Now, had you missed that trade, don't worry. The beauty of strategy number 4 is that it was always generating signals. So there were 2 more signals generated along the way that you could have gotten involved in. Now that's a 60-minute time frame. Here's the 10-minute time frame. Okay, this is going back a while to July, but I wanted to show you this just to share with you. This is a little bit more advanced trade. Some people have difficulty with this, but coming into the end of this day on this 10-minute chart, we were below the 50-period moving average. At the very last half hour of the day, we actually closed above it 3 bars. So someone would say, well, now the trend has changed. Now we're going to look for buy setups. But on the opening 10-minute bar of the very next day, we opened above and then closed below. And we closed in the bottom 25% of its range. So this is a valid sell signal. Even though the last 3 bars were above the 50, if your entry is below the 50, it's still a valid signal. So it's a little bit more advanced for more aggressive traders. We wouldn't suggest our beginning traders to trade this way, but it's a little bit more advanced, and the strategy add-on generated a sell signal on this 10-minute time frame. So the very first 10 minutes of the day, you had a sell signal, but you have to wait for it to trade below. So you would have gone short right there on the very next 10-minute bar, and look what happened. 20 points in the first hour of trading. That's $1,000 per contract. Now, we're not saying that all of our students stayed in the trade for the next hour for 20 points. I'm sure, had I taken this signal, I probably would have gotten out a lot quicker. But the point is, just to show you, the strength of these signals that come solely from strategy number 4. Now let's go to a 15-minute time frame. All right, we are above the 50 period, so now we're only looking for buy setups. We completely changed time frames. We changed, what we're looking at, and now we're in a buy setup. Here's the bar that closed in its top 25%. and the strategy generated a buy signal. So in the first hour of trading, we want to go long on this 15-minute time frame, but we have to trade here, and we did. We entered roughly about 2078, and the market went straight up after that. Okay? Now let's look at some Forex charts, because the same concept applies in the Forex markets. We don't change the rules at all for the market we're trading or the time frame or the direction. Everything stays the same. That's how simple it is. Here's the Swiss franc. We are above the 50-period moving average. We have a bar that closes in the top 25% of its range, so that's component number 1 and 2. The software generates a buy signal, but now we have to go to component number 3. Same exact rule. We want to buy if we trade above that bar. So component number 3 is in place, and we enter the Swiss franc roughly about 9,500, and look what happened. Okay, now, I know a lot of people trade currency pairs based off economic news and what's happening with interest rates and world conditions. Trust me, after trading 38 years, there's no reason to focus on that. That's very good for investors. And I would be the first one to tell you, if you're investing for the long haul, you need to know what a stock or what currency pairs are going to be doing 5 and 10 years from now. But if you're trading, a couple of weeks, a couple of months, even a couple of minutes, you don't need to know that. It only gets in your way. Trust me, for someone who's been trading 38 years, I stopped looking at news over 30 years ago. Really doesn't pay at all into what we teach. And we can look at a 60-minute chart of the Australian dollar. Once again, this is this more aggressive technique where we're above the 50 period, but then we close below and we close in the bottom range. So it's a valid component of number 2 component. So the software generates a sell signal. Now component number 3, we can only go short if we trade below that, which we do on the very next bar. And then look what happens. Trading is extremely simple when you listen to the market instead of listening to outside sources. So let's recap before we go into questions and answers. Here's what you learned today. Remember, component number 1, you must be in sync with the market, in sync with the trend. Regardless if you're trading 5-minute bars, you're trading monthly bars, you're trading weekly bars, or tick charts. It doesn't matter. You have to be in sync. Some people like to look at a higher time frame, 2 time frames to be in sync together. Other people like to look at tons of indicators, or even other people like to look at different charts, different patterns. Simplest and most powerful way I've learned in over 30 years is just apply the 50-period moving average and ask yourself, where is price in relation to that moving average? If price is above, you're only looking for buy signals. Okay, that's it. If price is below, you're only going to be involved in sell signals. We are in no way going to be buying below the 50 or selling above. Now, it doesn't matter. You can apply any strategy. You can apply any strategy. It doesn't have to be one of mine. You can apply any technique you're using. But please, that is the simplest and most powerful way to be in sync. And once you're in sync with the trend, once you know which side of the 50-period moving average you are, look for a bar pattern that either closes in the top 25% of its range or the bottom 25% of its range, depending on where you are in relation to the 50. Why are we looking for that? Because the market itself is giving you a great clue. Sometimes it's screaming this clue that it's telling you what it's going to be doing very soon. Okay? Most likely, if you're above the 50-period moving, it's telling you it's going to go straight up. And below, it's telling you it's going to go straight down. So learn how to listen to the market by looking for this particular bar pattern. And then lastly, how do we take advantage of that? Well, I gave you a component number 3, which is our entry technique. We just wait for confirmation, meaning that we want to confirm that we just trade above those bars that close in the top 25% of their range, or trade below those bars that closed in the bottom 25% of the range. And remember, this confirmation, we just needed to trade there. It doesn't have to close there. It doesn't have to close above. We're not interested in the close. All it has to do is just trade there. Okay? Now, I want you to ask yourself this before we go to question and answer period. I want to ask you a question. Do you think any of these edges could have helped your trading this past year? Any of the edges and the components I just shared with you? The confirmation entry technique, looking for that bar in the top, bottom, or top percent of its range. In fact, I think the most powerful technique I share with you was probably the 50-period moving average. Let's look at this example here once again, just to really show you how important this is in TE. Once again, someone looking at this coming into September would say, Steve, there's no trend here. I'm not going to do anything because I need to see a spike in volume. I need to see some news come out in this. And even though I was thinking about buying it, I'm going to wait to see, maybe wait till it breaks above this old high or something. So it's really just going sideways. I'm not going to do anything. Well, if you had added the 50-period moving average, you would have seen that all of the price bars are above the 50. So this was telling you that, yes, there is a trend, and the trend has been up. So if you waited on the sidelines to get long TE, you would have missed this big move to the upside. So once again, this is a fantastic technique to get you in sync with the market, and it's extremely simple. In fact, it can also keep you out of trouble. If we look here at this older example in Loco, a lot of people would say, boy, Steve, I was long this stock, and I was hoping and praying for it to turn around. A lot of guys said it was going to hold at this level because there was some strong support, so I held on to my position, and lo and behold, look what happened. Okay? You know, why does this always happen to me? Why am I always the last one to know about these news events or something? Well, you're not, because if you had added the 50-period moving average, you would have known weeks, if not months in advance, that price was below the 50 and that you had no reason even being long this. So a way to find out if this would work for you is go back and look at your last 10 or 20 trades, and I can almost guarantee you that if you apply the 50-period moving average, most of your losers would have been because you were out of sync with this simple rule. Now, in closing, I want to offer you one of our best packages for our beginning traders and people new to specialist trading. That's our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour recording of a video presentation I did in Denver about 3 years ago. I was asked to speak, to be the head speaker at a conference there, and they recorded it on video. It's 3 hours of me teaching and explaining more techniques just like the ones I taught you today, but entirely different. In fact, about 5 more edges that I didn't go over. I'm going to be speaking about those in this video seminar, as well as which indicators to use, which ones not to use. I talk about what the difference is between a system versus a strategy, but I think the most valuable thing in this 3-hour video seminar is that I actually give away all of the rules to one of our best pullback strategies, which is strategy number 1. In fact, let me show you some of the recent signals that were generated with strategy number 1 that many of our course members that have taken strategy number 1 course were privy to. Here's one at the end of September in BBY. Now here's the difference between what strategy number 1 is and what I shared with you today. Whereas before we were looking for more of a breakout type of positioning with the 3 components, here we're looking for a pullback. So many times it appears as if we're buying at the low, when in actuality, we are still in an uptrend. We're just looking to purchase at these low and very inexpensive prices. And once all the rules of the strategy are met, well, we have a buy signal. And as you can see, look what happened in BBY in the next week. Now, the same rules apply to the downside. This is a chart of Volkswagen. If you have been looking in the news lately, Volkswagen has had a lot of negative press because they were at fault for changing the results on their emission standards. So there's a lot of negativity. Well, the funny thing is, before the news came out, strategy number 1 generated 2 sell signals. One in August, right up here, and you can see what happened. The stock fell from 42 all the way down to 36. And then another one was generated just about a month ago in September, on the 9th of September, to go short, and look what happened, okay? Just to show you how well this works in any market, any direction. This can also be used in the currency pairs. Here's the euro dollar in August. As you can see here, we had a nice run up, but then we started to go lower. Now, strategy number 1 does not concern itself with closing in the top 25%. It looks at different rules, but it still has 2 other rules of the components we share with you today. And as you can see, the euro dollar went straight up after this buy signal on a pullback. And then lastly, we can use this on intraday trading. Same rules, same things apply, whether we're trading stocks, currency pairs, or E-mini futures, and regardless of what the time frame is. Now, we were in a downtrend here, and as you can see in this 5-minute chart, this was just a week or so ago, we had these little bounces to the upside before we would resume a lower trend. Another bounce to the upside goes lower. Another bounce goes up lower. Those are all pullbacks to the upside, and these are all the sell signals that strategy number 1 generated. So as I said, I give away all the rules. You'll know exactly where to buy, where to sell, where to place your exit, where to place your stop, and money management techniques, all included in our Secrets of a Stock Exchange Specialist video seminar. Once again, this is 3 hours of trading techniques, and the beauty of this is you also get lifetime correspondence. You're now a member of Specialist Trading. So you get 3 hours of more trading edges plus a full strategy. Now, my sister site, Pro Trader Strategies, they have this advertised on their website for nearly $1,000. That's how valuable it is in terms of information that is available. But today we are offering it to all the attendees for only $37. $37, that's an unbelievable price, and I can almost say you probably spent more than that just trading the markets today. But that's only going to be for about the next couple of days. So don't think that, if you think about it and then you decide to do it next week, you'll still get $37. It'll go back up to $997. So if you want to get 3 hours, jam-packed information, more techniques like I just shared with you today, plus a full strategy. This is a video of a seminar I spoke at where people paid hundreds of dollars to see me speak and to get this information. This is all yours just for $37. It's a video link that is sent to you, and you can watch it at your own leisure. You can watch it, at your lunch break. You can watch it during the day, and it's yours for life. It's not something that only lasts for a couple of weeks, then it expires. It's yours for life. So here's how to get this great deal. Pro Trader Strategies is who you want to contact. As you see there, that's their email address as well as their phone number, and you can see the link at the very bottom. You'll have to copy and paste that onto your browser, but if you go to the chat box on the far right of GoToWebinar, you'll see that they've posted the live link. So if you click on that live link in your chat box, that will automatically take you to the $37 sign-up page, and you can be up and running and watching the video in just a few moments. So I'm going to leave this information up here. Remember that all that is in your chat box, and I want to thank you for waiting on asking any questions. So I'll open up the question and answer box right now. Okay, let's see. Jack asks, component number 3, is there a limit as to the number of bars before it trades above the marker? Well, yes. Remember, component number 3 states that you have to buy on the next bar. In other words, you cannot, have a bar that closes in its top 25%, okay, and then wait a month for it to trade above it. Component number 3 states, if you watch this video again, that it has to happen on the next bar. If it doesn't, then we're out of the setup. The reason is we're trying to catch momentum, and usually momentum will occur on the next bar. Oftentimes it doesn't, so that's why over time we do not wait around. Now, we have some students that say, well, Steve, I like to give it maybe 2, maybe 3 bars. That's okay. Remember, these are strategies. They're not systems. Strategies a lot about 30% room for discretion and insight. So that's okay because you're not really altering it all that much. But to stick with the basic format and pattern, plus this is what we use with strategy number 4, it has to happen on the next bar. Okay, good question, Jack. Any other questions? Remember, if you like these 3 components, I go over about 5 more entirely different components in the video series for $37. So it's a great, great value for that little amount of money. And as I stated, I'm not trying to, scare anyone, but that will go back up to close to $1,000 by next week. So I can't stress what a great value that is. And for $37, you can't even go out to dinner anymore for $37. So I would really take advantage of that while you can. If you're having difficulty, contact Pro Trader Strategies. You see there is their email address, their phone number. You can call them directly. And if you'd like to get a link to the recording, you can request it from Pro Trader Strategies as well. But the best thing would be to simply go to the chat box on the far right, click on that link, spend the $37, and then you really see how valuable and worth it is just to spend that small amount of money. Okay? Well, if there are no further questions, I want to thank you all for attending today. As you saw, I pay a lot of attention and detail to teaching people so that they can ultimately elevate their trading. And even if you don't decide to become a student and member of mine, I hope that the 3 components I share with you today will in some way, make your trading a lot easier and put you on the right track to becoming consistent. But if you really want a mentor who has been trading for over 38 years experience, and someone who is there for you every step of the way, please, purchase that $37 deal and you have lifetime correspondence with us. Thank you so much for attending today. If there are no further questions, thank you so much for attending. And thanks again. I look forward to all of you becoming students and members of mine at Specialist Trading. Bye-bye. We'll see you next time.